So, Bob, in recent months, much of the attention of this heightened volatility environment has been on the public markets. But with companies staying private longer, a lot of the innovation and value creation has been in the private space. Can you talk a little bit about what has happened in the private markets during this period of heightened volatility?
Sure, Mike, and thanks for having me. I think the benefit for investors of investing in the private markets is that they historically haven't moved with what I'll call the emotions of the public markets or the macroeconomic environment. This allows private equity firms to focus on building business value over the long term without getting caught up in the day-to-day or even quarter-to-quarter moves that you see in public markets. I'll also add private equity firms are really well prepared for volatility. If you think back just 5 years ago, we were in the middle of COVID with significant uncertainty. 3 years ago, we had the interest rate hike cycle, inflation, which significantly impacted the cost structure of companies. And so now the base case for companies is almost you will experience volatility, and skilled managers are able to take advantage of that. Something we sometimes call the illiquidity premium or taking advantage, maybe in the public markets, you might call it time arbitrage. And that's the ability to focus on long-term value creation rather than getting caught up in these day-to-day market moves.
So, Bob, given all of this, what are some specific opportunities we see in the private market space given this high volatility environment?
Yeah, well, the first thing I'll say is private markets are not intended to be tactical. They are part of a longer-term strategic asset allocation. But having said that, we are getting a number of questions from clients around three main areas: secondaries, private credit, and venture capital. So let me start with secondaries. Secondaries, we've been in this macro environment of limited exits for private equity companies. M&A activity has been down, IPO activity has been down, and secondaries provide liquidity to investors in a market that lacks liquidity. That means we have the ability to negotiate really attractive entry points for investors that can create strong long-term returns. The second area of private credit, there's been a continued shift from traditional bank lenders into the private credit funds market. Spreads are very attractive. The risk profile is very strong right now, which sets up very well for investors over the long term. You can also earn a current cash yield off those investments, which is also attractive to our clients. And then finally, there's venture capital. Venture capital takes advantage of innovation. You mentioned it in your introduction. The companies that you and I will be talking about in 5 to 10 years as big public companies are the companies that venture capitalists are investing in today. A lot of those may be in artificial intelligence, they may be in other industries, but we want our clients to take advantage of that value creation that's now occurring in the private markets versus the public markets.
So, the obvious question, given all this volatility, how have our alternative strategies performed in this environment?
Yeah, they've held up well despite all the macroeconomic moves we've seen and the day-to-day moves I mentioned earlier in the public markets. A lot of times people equate strong exits to performance, but I think I need to separate those two. Just because we're not getting a significant amount of distributions right now doesn't mean fundamental business value isn't being created. We see good revenue growth, we see strong cash flow generation in our underlying portfolio companies, and this sets up well when exit markets do return. Skilled managers are able to actually take advantage of these bouts of volatility by, for example, maybe buying a weaker competitor or adding talent to their management team so that they've created this value so when exit markets do return, they can generate strong cash returns for their investors.
Thanks, Bob. It sounds like there's some good opportunities in private markets right now.
Sure is. Thank you, Mike.